resource investors know that costs have been rising, and we're hearing that $1,200 gold is now the profit threshold for miners around the world when you factor in all kinds of costs. But it's kind of confusing because the miners were apparently profitable 10 years ago when gold was only about 400. So what are the costs that have gone up so much? For a closer look, we're joined by Ken Hoffman, Sector Head Global Metals and Mining Research at Bloomberg Research. It's great to see you.
Thanks for having me again, Andy.
Tell us, where have the costs gone up the most over the past decade?
Well, we started our research to look at what's sort of going on, because you're right. You would think, in 2000, the price of gold is $400 an ounce, and these guys, made some money, and today it's, even at today's levels, at $1,400, and they can't make money. There's a few part of the factors. First off, we looked at energy cost. So if you look at oil and diesel, it's up about 125 to 150%. Okay, that impacts their margins. If you look at wages for the miners in Canada, they're up about 50% since 2000. But the labor cost overall is up about 200%.
Wow.
So what that is telling you is the miners are actually spending a lot more effort to get the dirt out of the ground. So we looked at Barrick, and I'm happy that you mentioned Barrick, because let's look at Barrick. Back in 2000, whenever they mined a ton of earth, they got about 1/10 of an ounce.
Okay.
Today, when they mine a ton of earth, they get 65% less gold out of that ton. So it takes a lot more work for them to get gold out of the ground. And it's not just American Barrick, it's the entire industry. We've done research to show that over the last 10 years, that the grades of ore for big companies around the world can be down up to 80%. And that's just, it's getting more and more difficult to find good gold mines, and the good ones are all running out.
That's amazing. I think you said Barrick, the amount of gold that they're getting for every ton of ore they produce is only about 1/3 now what it was 10 years ago?
That's exactly right. Even in their best mines, and I looked at Goldstrike, it's really what made American Barrick into Barrick Gold, this world-class company that we know of. Even in that company, back in 2000, they had about 2.6 billion tons of ore, and it was grading around 0.19 ounces of gold per ton. Today, they only have about 130 or 1.3 to 1.4 billion tons of ore left, and it's about 40% less grade. So even in the world-class mines, there's less ore to be had, and it's coming in at lower grades. And all those things are telling you that even if the price of gold drops much below 1,200, you'll see a lot of mines closed.
You've been tallying these rising costs, looking at the all-in cost for major miners. Some of the numbers are pretty stunning. Apparently, Kinross, their all-in cost is now north of $2,000.
Yeah, there's some byproduct credits and things in there of that nature, but yeah, there's a lot of problems in the gold sector. Even the best in breed companies are still looking at $900 to $1,000, and that's really best in breed. So $1,200 is sort of the pain threshold, we think. At that point, a lot of miners will start to consider cutting back operations. They're definitely all thinking about cutting back their capital expenditures at this point in time, and they really have to figure out what's going on here. And of course, we've talked about this before. This comes at a time where they can't raise money in any way, shape, or form with the markets the way they are, and the price of gold dropping doesn't help them at all either.
And not to single out Kinross, but why would their number be so high? Is that partly because they paid so much to acquire that big mine in Mauritania, Africa?
I believe so. We haven't gone through company by company exactly the way we did for Barrick. But yeah, there are some extra costs in there that sort of force their number a little bit higher than the rest. But Kinross is one of the companies I know definitely in talking to their management. It's sort of all hands on deck to reduce costs and get that number much, much lower.
Anything else that the Barrick investors should bear in mind here when they look at the results tomorrow?
Well, look, Barrick is really looking, like all these managements, on what is going to be the way forward. I think they're looking at gold prices at $1,400, saying, look, what if this is a lower price gold environment going forward? And if that's the case, how can we ensure that our assets are very low cost, that we don't have big capital expenditures because it's being more difficult to raise capital? Definitely, they probably won't be looking at M&A opportunities at all. But how are they going to restructure? And I think Barrick's CEO has said, hey, we're not looking for new acquisitions. what can we do with the assets we have? So I think we've heard about them potentially selling off some assets, and they're going to restructure the company to make sense so they can actually get what they're supposed to do, which is great returns back for their investors.
We're almost out of time, Kenneth, but we're looking at a board of how byproduct credits, metals that they mine kind of by accident but manage to sell lucratively, those prices are going down as well, so that's another pressure on costs.
It's really a double whammy that you're seeing. I mean, look at the price of copper. It is down almost every single day. Silver's been hit hard. All the base metals here are really in a bit of a free fall at the moment. I think I saw copper actually hit $6,800 a metric ton briefly this morning. It's a real problem in the metals world. The base metals have the problem with China. China's definitely slowing down. Their imports are definitely dropping. And so that just compounds the issue, because you're right. A lot of mines like Freeport-McMoRan, are they a copper or are they a gold company? Sort of depends. But when both of those prices drop, it really impacts them.